Welcome, welcome. You're here at the Naked Trading webinar. My name is Walter Peters, and you're going to see my chart just about now. Welcome, Ganster. I see Ganster's here. Ganster's at another webinar. And Alvin and Luis, FXB, Guillaume, Ulrich, and Eddie. There's G and Terry and Mucho 4099. Or is it Mucho? Is it Mucho 4099? Is that how you say it? Bien. Bien, y tú. Zul is here. Leo, CatFX, DF, Dathan, Svilen, Talon, and Jocelyn just made it as well. Oh, Mucho is from BG. Is that Bulgaria? Hey, Leo. What's going on, Leo? Oh, from Spain, right. Okay, let's get going, guys. Check it out. This is what we had. And if you don't have the book for the belt, let me know. Because last week was a great example of what happens when you get some belts in the market. Check this out. This right here, this candle right here, mucha cerveza. This one right here is a belt. We had them across the board actually last week. They tend to happen on Tuesdays. So they're pretty mechanical. So here's a belt. It's a Euro-Yen belt, and it printed right here. It's a bearish belt. You'll notice that it also printed where these other candles sort of had difficulty. Right here, this candle couldn't get through 111.29. This is the Euro-Yen, but it happened on many yen pairs. Same exact setup over across many pairs. And I'll show you how I compared them as well. So we had this touch right here. This was the March 21st candle. This is a daily chart on the Euro-Yen. Then we had another touch right here, and this is the March 27th candle. And then last week, we had on April 2nd, we had this candle, which is a bearish belt. So what is a bearish belt, you may ask? Bearish belts are explained in the ebook that is available to everyone here. All you have to do is email me. And this is my email right here. And I'll give you the bearish belt book, or the belt book, sorry, because there's bullish belts as well. I don't know why I tend to, does everybody here know what hey Colin just showed up, and Keith, does everyone here know what your bias is? I know that my bias is to sell, right? I know that for me it's easier to pull the trigger on a sell trade than a buy trade. Not sure why. Maybe I assume that gravity is helping me in that case. I don't know. It seems a little bit irrational when we consider that we're trading currencies, but it just seems like to me it falls a little faster than they rise. So I know it's pretty funny. It's pretty funny, right? But it's true, and that's how I do it. So I know that I like to sell. Now, do I still take buy trades? Yep. Sure do, but I tend to find sell trades faster. I tend to apply myself to sell trades more often than to buy trades. So I have a sell bias. So when I see these belts, these bearish belts here, I get really excited because I like to sell and I love to sell belts. So yeah, Alvin says sell is due to panic in the market. Now, the interesting thing to me is that we're looking at a Euro-Yen chart here, right? But we could just as easily look at a Yen-Euro chart, couldn't we? Oh, we're dealing with currencies here. So because we're dealing with currencies, we're just looking at one money compared to another. So in theory, we could look at a USD Euro chart as well rather than a Euro USD chart and all that. But the point is that I know that I have the sell by. So when I saw all these bearish belts here, and a bearish belt is simply a candle that opens up with a gap opening on the first trading day of the week. So it's usually Sunday or Monday, depending on where you are. And then it just goes basically in one direction and closes at the other extreme. And that's exactly what happened in this candle right here. So I trade it like I trade my normal setups. I have my stop loss on one side of the candle, and I have my sell stop down here below the low, and I wait for that to trigger. And it did trigger the first day, and it was a bit of a drawdown. It closed in about 70 pips of a drawdown, and then after that it was all over. Then it fell 125 pips the next day, and then it went another let's see right here. So it was up about 58 pips the first day, 135 pips, and then it was up to over 200 pips right at the end of the week. And then today you can see it's in a little bit of a drawdown. It could easily get down to 105.76, I think. But at this stage, trade's risk-free. If it does come up and hit out my 5-pip stop, then I'll make 5 pips. The real issue for me on this trade was I wanted to see it close below 107.70. That, to me, was the critical hurdle. And you can see why, right? Because look at all this support here. That was the first hurdle it needs to overcome. If the market could close below that, and it has done that, then I figured that 105.70 was an easy, or at least 105.85. 105.85 was an easy make. And that's how I viewed that one. Are there any questions about this belt trade or belt trades in general? Because we had several. We had several of them over last week. Keith wonders if I like chains and whips as well. Well, Keith, I'm not that kind of guy, unfortunately, but I do see I do see where you're going with that. No, I like belts because for me they have a really high win rate, and I'm like a lot of traders. I like to win, and it doesn't mean you can't make a lot of money if you don't win that often. Some traders are okay winning 3 out of 7 trade or 3 out of 10 trades, and having 7 losers, but having 3 pretty fat winners. Yeah, so I mean, this could still be like a 10-pip winner or a 5-pip winner. If the market does come all the way back up here and stop me out, that's entirely possible. But I think it's more likely to go another 120 pips to this area here before it gets back up here at this stage. No, Alvin, belts are not engulfing candles. This belt happens to be an engulfing candle, but not every belt is. And let me show you another one so we can perhaps compare. This one is also a belt here. Hey, Ganster, I thought I saw you here earlier. Here's another belt right here, and you'll notice this on the Swiss yen. We actually haven't, until last week, we hadn't had any. The problem with belts is, if I could, I would just trade belts and nothing else. The problem is they just don't occur often enough. Like we had this one, and then, before, so if you look at this chart on the Swiss yen, for example, Swiss yen, we had this belt last week, and then the one prior to that was here, 50 trading days ago in January. So, and you can see this one's right here. This one also happens to be an engulfing, or what I call a big shadow type trade. Let me compare an engulfing trade or a big shadow trade to a belt, Alvin, because that's a good question. This one isn't, obviously. If you zoom in, you can see how this candle does not quite, well, it depends on how you look at it. Some people look at the body of the candle In that case, yes, it is an engulfing. But if you look at, like I do, I look at the entire candle. The low here is not lower than the previous candle, so it doesn't quite completely engulf the previous candle. So, okay, so I'll go over again, if anyone wants the book, you can have the book on belts. And the book has examples, tells you all the rules of belts and how I trade them. And all you have to do is email me, walter@fxjake.com, and ask for the belt book. But let me go over it real sort of quickly. What I do is when I see it, I like to see it print on a zone, kind of like the Swiss yen. And it does print here on a resistance zone. You can see we had a touch here, a touch there, and a touch right there. I like to see it trade lower than the low of the first candle, and that did happen here. Now, how does a belt happen? A belt happens with a gap opening. So the market actually gapped open on Monday, April 2nd, right? You can see that it opened up higher right up here. So here you go. It opened up higher, and then usually what happens with belts is and the reason we call it belts is because there's usually hardly any wick. Notice that the last belt back here, see how this is a belt, this candle right here, let me show you. Notice how this candle had like almost no wick, and that's usually, the open is usually the low or the high. So in this bullish belt here, we see that the open is actually almost the low. The low is 82.07 and the open was 82.02. So it was within, the low was 82.00 and the open was 82.02. So it was within 2 pips of the low, and that's pretty typical. Notice also that the close is up near the high. That's also very typical. So the close here was at 82.98 and the high was 83.19. The higher the better for a bullish belt. So that's a typical belt there, and this one is obviously a typical bullish belt right here, typical bearish belt right here. So I like to see the close down near the low for the bearish one, and obviously the open should be near the high. Now, so what happens is you get a gap opening. You won't know that you have a belt though. You may have many gap openings, but very few belts. So in other words, not every gap opening ends up as a daily belt. I trade these on the daily chart. So only if the market falls after the gap opening all the way in one direction, do you get the belt like we did right here. So that's the first rule. The first rule is you have a gap opening. The second rule is that the open is very near the high for a bearish belt. A reverse rule is for a bullish belt. The open is very near the low. The belt will go trade in one direction. That daily chart will trade in almost one direction, and it will close near the extreme. So the extreme low for a bearish belt, extreme high for our bullish belt. The next candle must trade lower than the low of our belt, and that's of course what happened here. Stop loss goes on the other end of the belt, and then what I like to do is I like to ride the belt down to the next zone. So for example, the Swissy is right down here. And has hit the first zone already, the Swiss yen. And if the first candle doesn't trigger my belt, I usually will just give up and not take the trade, right? If the first candle, but sometimes I will give it one more candle. I have to admit, with a lot of trades, I won't, if the market doesn't go in my direction immediately in the next day or the next candle, I will often kind of just give up. But with belts, sometimes I do give them a little bit of leeway. Let's look at another belt from last week. We had the Aussie yen, which is also still in play. Let's see. Where the heck is it? There it is. So you can see here's our belt right here. And this one also is a belt, but it is not an engulfing candle. See how it's not a big shadow. Like the low of the belt does not trade lower than the previous candle here. Okay, are there any particular pairs, says Keith, asks Keith, are there any particular pairs pairs that you like trading belts. I do like them on, like, generally what happens, you'll find, like, if there's one on the Swissy, there'll be one on the Euro. If there's one on the Kiwi, there'll be one on the Aussie. And if there's one on the yen pairs, a lot of yen pairs will have them, like last week. Now, I kind of don't like to trade them on the exotics. Like, I don't trade. I think there was one recently on, like, the pound Norwegian krone or something like that, and I didn't take it. Yeah, so I kind of don't like to trade it on the weird ones, like the Nordics and stuff like that. And I probably wouldn't trade it on the Polish zloty or the Mexican peso. But on a lot of the majors, I trade it. So hopefully that makes sense. Gamster says, does it matter if the belt is the biggest? Yeah, I just stick to the majors, Keith. Gamster says, does it matter if the belt is the biggest bar of the last X bars? Well, that's a great question. Let's put it this way. I prefer that it is. I definitely, no doubt, prefer that it is. But it's not a deal breaker for me. So let's go to the daily pound yen. It doesn't have to be another belt right here, right? It doesn't have to be the biggest candle, but the best ones are. If I get a really, really tiny belt, I sometimes won't take it. How do I explain this? For me, the best thing about the belt, or the thing that's most important to me, besides the fact that it has to close near the extreme, and it should open near the extreme as well. The open to that one extreme and the close at the other extreme. So it has that belt sort of look. Some belts will have like hardly any wick on one or both ends of the chart. For me, I have to say that probably my favorite sort of aspect of the belt is that it sticks out from recent price action. It's that thing I talk about with other setups like kangaroo tails and big shadows. It's that idea of space or room. Now, these belts from last week were a little bit unusual because they actually all, they all sort of printed up against recent resistance. So, I mean, that's a really good thing too, right? If we can play off of recent resistance, that's great as well. But I kind of like to see my belts stick out from the charts. For me, that's ideal. In other words, I like to see a nice big gap start my belt, if that makes sense. Now, so I guess for me, Ganster, the three things that are most important for a belt would be that one, it's got a nice big gap opening, right? Two, that the wicks are very small on at least one or both ends. In other words, I want to see that open near the high, and I want to see that close near the low for bearish belts. And for bullish ones, I want to see that open near the low, and I want to see the close near the high. And so it's not that critical that they're the biggest candles, but they do tend to be the biggest candles. There are exceptions. There was one on the Aussie, I think, it's going back now. I think it was, here's one right here, right? There's one marked with this arrow right here. There's another belt. I think this was actually in 2010. And it wasn't the best belt. It worked out great, but it's kind of a small candle, and here's one right here. Here are the rules actually for the belt right here. Here it is right here. The open is far from last week's close. A bearish belt has a close near the low. A bullish belt has a close near the high. The open is near the extreme, high or low, and it prints on a zone. Now, that printing on a zone thing, I've actually kind of taken that rule and it's not that critical anymore. I've kind of just slipped that out. It's not, to me, the belts aren't, it's not that critical. Here's an example of a belt that actually, it had the close near the low, but the open actually is near the midpoint. So in theory, I could see where you would look at this candle and say, I don't want everything to do with it. It's not a real belt. And to be honest, I almost did that with this trade back in June of 2010. But I had to take it because the belts are just too good. So I did, and it did eventually go down to these lows, to these highs right here. These highs, it did finally make it there. Sometimes it takes over a week. So this, you enter on Tuesday, and then this one was nasty retracement too. I thought I made a mistake when it retraced all the way up. But this is Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. So it was a whole week before it made it to the target, which was these highs down here. Where these candles turned around right there. So that's an example of a belt that wasn't necessarily the largest candle. It also didn't really fit the ideal profile of a belt. Again, I like to see, belts should look kind of like this candle right here. This candle is not a belt because it didn't gap open, but you want to see them looking like that, or you want to see them looking kind of like this candle here. Really nice long candles with no long wicks really is ideal. Now, Abd says that you missed the early part of the seminar. Will the recording be available later? I believe it will, Abd. I believe it will. I think FX Street will offer the recording. If not, you can email me. Alvin says, and that's walter@fxjake.com, Abd, if you want to email me. Alvin says, does it apply to all time frames? Absolutely, Alvin. Here's the thing, though. Here's the thing about belts. It's possible to trade them at all time frames, but not all time frames. How do I say this? It is possible to trade the belts at all time frames, but not all the time frames have the same win rate, right? They are recording this, says Colin. So, Ab, they are recording this one. Okay. So, for example, let's say that you wanted to trade the 1 hour belt. Let's go back to last week's belts and we'll look at the 1 hour chart. Okay. So, let's go. See, here's an example right here. Let's say you want to trade a 1 hour belt. So we start, obviously every daily belt starts with at least a gap opening and perhaps a belt. So let's say you saw this and you wanted to trade the Euro-Yen 1 hour belt. See you later, Colin. See you later, buddy. I love badminton. That's funny. Bye, Colin. Here's a belt right here where, you get a little bit of a wick on one end, so maybe you look at it and say, it's not a true belt and I don't want to take it. But they're tempting to take even if they don't have the perfect form. So let's say you see this one and you say, well, I'm going to trade like a gap trade or something like that. Well, here's the issue. The issue with this is that here's the high right here. And if I traded this one, and I traded it down to the high here, I probably wouldn't have been cashed out. Because of the spread early in the week, and because of the fact that it just went, how much lower did it go than the same target was 110.58, and it went as low as 110.55. So, yeah, it's 3 pips. Probably not a 3 pip spread on the euro early in the week, on the euro yen. Probably I don't get cashed out here. And remember, my stop is on the other side of the high, right here. So on this candle, I get stopped out. So that's an example of a 1 hour setup that didn't work out so well. What I found is that you'll get belts across the board. You'll get these belt setups on many, many currencies and on many, many time frames. But if I want to trade these belts with reliability, what I do is I trade them on the daily charts, because even though this 1 hour one didn't work out so well, on the daily it was fine. On the daily it went. In fact, it went on all of these yen pairs. On the euro yen, it went. On the Swiss yen, the belt went. On the Aussie yen, it went. Even on I think the Singapore yen also printed one. Let's see, Singapore yen right here. Yeah, Singapore yen had one. All right, here's another belt. It had a bit of a nasty retrace, but it did go, and it went all the way down to that zone. It just touched it, in fact, today. So, and again, what I like to do when my targets are on the zones is I make sure that they're a little bit higher for a sell trade. So even though this one just tagged it like almost directly, I like to have my target a little bit higher than the zone. So in this case, the zone is drawn at 64.29. So, it's good to have your target, 10, 15 pips higher. So 29, so maybe 39, that sort of thing. Because it did go as low as 64.29. It tagged the zone exactly, on my chart. So there's another Singapore yen belt right there. It's this candle right here, obviously. The euro yen, the Swiss yen, the Aussie yen, the Kiwi yen, even the dollar yen printed one. Does everyone see the belt here on the dollar yen? It was right here. It was this one right there. Yeah, they're really reliable on the daily chart. Now, obviously, the dollar yen has not really even broken the first zone here. It's still sort of hanging out. And the critical thing was for it to close below, and it did close below on Friday. And it looks like it may even close below today. We still have a few hours to go today before then this belt is likely to go to these lows here. And then probably, if I had to guess, I would guess this area right here, where you have these highs and these lows. The entry point, Alvin, is pretty similar to a lot of my trades. The way I trade is on my kangaroo tails, big shadows, belts, whammies, moolahs. All my trade setups, I do a very similar thing, which is, let's say I wanted to trade notice that this candle right here is not a belt, right? On the Euro Aussie. Kind of looks like one, but remember it has to have a gap opening. And the open on this one is at 128.06, and the close the previous week was 128.06. So it opened at the exact same price. Let's say that I was interested in selling the Euro Aussie, and I said, okay, I think the Euro Aussie is going to fall, and it's going to fall all the way down to this level down here. What I would do instead of selling it right now is I'd put a sell stop right here. So that's how I use it on belts. I'll use a sell stop or a buy stop. So the market has to make a new low or a new high to trigger my entry. That's how I do that. So Alvin, if we go back and look at some of the belts we've had recently here's the one on the Kiwi yen we had right here. But we also had one here on the Kiwi yen. Let me zoom in. Here's a belt right here, bearish belt. And so what I do is I say, okay, my stop loss goes above the high right here. And I wait one day, one candle, for the market to make a new low and take out the low of the belt. So I just put it a few pips below the low. That's it. So there you go. That's the entry here. Now I'd like to see it ride down to the next zone here. Keith, do I keep stats on how often they work? What I would do is I would take for me, they work about like 85% of the time. But, you have to be choosy. The best way to do it is to actually back test them. And you can go into a program like Forex Tester. Do you have Keith? Do you have Forex Tester? I've got a discount link for Forex Tester if you want, and I know that the FX Street does as well. Yeah, Alvin says, in other words, it can be any candle after the belt which breaks below the belt. Yeah. And the same thing for a bullish one. That's it. It's that simple. That's how I trade. The reason why I trade that way, Alvin, is because it's tempting to get in on a retrace, but if I get in on a retrace, then I guarantee that I guarantee myself that I'll get in on all the losing trades. All of my losing trades will be entered if I get in on a retrace. If I use this system of entering, then I actually will only get in on. Now, some trades will still end up being losers, but I get in on those trades where the market's going in my favor. Yeah. Yeah, but Alvin, I only wait one candle generally. Generally, I wait only one candle. So if the market trades lower on the next candle, that's the entry. Sometimes with belts, I have to admit, I will give it one more candle because I like them that much. Yeah. So there you go. So what happens with this? What happens when I do this is I miss out on a lot of those losing trades by waiting for the candle to trade lower. So let's talk about optimizers. What are some of the things about belts that, for me, show that they're going to be good? What does the optimal belt look like? Well, let's talk about this one right here. This candle right here is technically a belt, but there are a couple of things I don't like about it. The most interesting thing about this one right here, it's interesting that it printed at the exact same spot where our last belt did. Look at my black lines here from the stop loss and the entry. That's really weird. So this candle right here, there are some things that I like about it. The first thing I like about it is that the close is actually the low. The close and the low are both 59.46 on the Kiwi yen. The open is not really at the high. It did go a little bit higher after the open. And it doesn't really stick out from the recent candles. A little bit of the candle does stick out, but it's mostly it printed on the same area as the previous candle. The other thing about it is that the close here on August 27, 2010 was at 60.52, and the open of the belt bar was at 60.77. So, closing at 52, opening at 77, that's 22 pips. That's okay. That's all right. But, I kind of would like to see a bigger gap opening there. I like to see my belt sort of stick out more. Alvin says belt candles are not necessarily to be at reversal or swing points. No, they're not. But I used to only trade them if they were at sort of support and resistance zones, as I like to call them, Alvin, or swing points, as you may call them. So perhaps I've loosened my, I've sort of become a little bit more over time, a little bit more forgiving for belts, simply because they work out so often for me, and I really enjoy trading them. So I would have taken this belt had it printed a little bit further away. I don't mind taking belts that are sort of in line with the general move, like this one was. They do tend to occur at reversal highs or reversal lows, though. They do tend to, and then you'll get the occasional one sort of in line with the trend, like this one. Now, the market did trade lower on the next candle. It did go down to the zone, the first zone, but then it rocketed up after that. The CAD yen, let's look at the CAD yen one. Ganser wants to take a look at it. Oh, you're talking about the one today. Is that what you're talking about, Ganster? Yeah, see, does everyone see what he's talking about? I thought we had a bad tick on that. I thought that my charts had a bad tick. So I kind of thought that that this gap opening today wasn't really a real gap opening. Does everyone have this on their charts as well? Because I looked at another chart, Ganser, from my FXCM that has my FXCM data in it, and I didn't see this gap. I can bring it up actually. Let me bring up the other chart because I didn't have a gap on there. So I kind of discounted that one. I just considered it a bad tick. Let's see. Where is my belt? Where is my... Ganser says... Yeah, it's very subjective. Well, here's the thing. Let me bring up my chart here, and I'll turn on my camera again. So I've got this CAD chart here. It's a daily chart, and it's the FXCM feed here. Let me bring it up so we can compare. Because here's the CAD chart right here. So you can see it now, right? And notice that oh, that's the dollar CAD. Here's the CAD yen. So here's the CAD yen on this is the FXCM feed. Since I trade with the FXCM, I like to look at this chart sometimes. So here we go. You can see that it's a very different looking. It's a kangaroo tail on the CAD yen here, whereas we've got a belt here because the open on this one was what's the open? The open on FXCM feed is at 81.75, and then the open over here is 81.09. So that's a big difference. 64 pips, or 66 pips. So yeah, I looked at it and I thought, no, it's not a real belt. So okay, but let's assume that it is. Let's say that we want to take it. Let's say that we like the look of it. Let's say that we want to take this trade. So how will we trade it? Let's look at that, because that's a fair question. All right, so let's take a look at this. All right, so what would I do? Well, I would well, first of all, we have to wait for today's candle to close. And if it did close about where it is now, that would be a pretty good looking bullish belt. And the first target would be about 95 pips away up at the next zone. Then I would be looking at this one right here, where these highs top out, the close really, and that's about 155 pips away. And the last one would be up here, sort of where these highs are, and that would be all the way up here, 235 pips away. My stop loss would go up on the other side of the candle, and I'd wait for tomorrow's candle to print for it to break higher. That's how I would do that. And I wouldn't really want to see it triggered during the Asian session. I'd probably put my order in after toward the end of the Asian session. So if I lived in, say, San Francisco, that would be, probably right before I went to bed. Maybe around 11 p.m. or whatever, I would put my orders in. That's kind of how I would do it. Or maybe 10 p.m. Yeah. If I go to bed early. So that's how I would do that if I wanted to trade that. But again, I kind of think that looking at some of the other charts, I kind of think that this, maybe not really, I'm not sure if the market really would have, if I could consider that that was it was a really nice looking one. Remember last week it closed at 81.74, and then it opened up all the way down here, 81.09. So a big jump. Yeah. Nice big jump there. I would trade. That's how I would trade that one if I wanted to. But again, I'm not sure that that's a true. We had these huge, outrageous. Like, look at this on the CAD. You know, I'm not sure this is real. And I looked on the FXCM feed, and it didn't have this. You know, this is like a belt on steroids. It jumped 152 pips. I write that off as a bad tick. I just have to. So, yeah. Put it this way: if I was in a sell trade on the CAD, and it went up there, everyone should be able to see the CAD here. Put it this way: if I saw this trade right here, and I was in a sell trade from last week, and I got stopped out, I'd call my broker and say, hey, you know, what's going on here? You stopped me out on a bad tick. You know, that's what I would do. Yeah. So that's what I would do. Yeah. Even the New Zealand yen is doing it too on my chart, says Gangster. Okay, let's take a look at the New Zealand yen and see. Okay. So we do the New Zealand yen. So it does have a little bit of a, let's see, so last week it closed at 66.78, right? And then we have an open here at 66.56. Technically that is, if it closes like it is, technically that's a belt on support down here. But again, it doesn't really stick out. And I'd like to see at least a little bit of the candle stick out. Look, compare it to this one right here. So you got two different ones. We got this one here, and then we got this one here. This one isn't confirmed yet. It hasn't closed yet. Again, it's better if they sort of stick out here, and how this one sticks out is a little bit better than this one here. So, yeah, I would. For me, I probably would give this one a miss. Yeah. Are there any other questions about belts? Pretty simple stuff. Good fun though. You can have a lot of fun trading the belts. And you can trade them on a 1 hour chart. You just won't, in my opinion, I don't think you'll see, here's a pound CAD, another bad tick on the CAD, right? I think if we were to trade them on the 1 hour charts, you'll see that and I do that actually. I do that every week. I go in and we look at them when they open on the lower time frame charts. But the win rate's not quite there. You have to be a little bit more choosy. Yeah. We look at them. We have a webinar every week, a free one for people who like to trade these on the 1 hour chart. Yeah, it's fun. Good fun. Here's a Swissy. So all the belts we had last week were Aussie yen, Singapore yen, Kiwi yen, Swissy yen, Euro yen, pound yen. There wasn't one in the CAD yen, I don't think. No, there wasn't one on the CAD yen. I think that's it. Now, how I was going to talk about this earlier. How I like to do this. I like to actually compare them. Like when you get the dollar yen as well, we had one. I like to compare them and see which one looks the weakest. You know, so I like the ones there's two ways of approaching it. You can take the belt that sticks out the furthest, or you can take the belt that actually sags the lowest. So think about it like this. Compare the dollar yen belt right here, right? There's a very small gap here. There is a little bit of a wick on here, so it did trade higher than the open, which isn't really the best thing. and it's right up against a serious support level. All right. So in some ways it's nicer because it's not as high as these touches over here. But in another way, it's actually really sad because it's right up against the support zone. And look what happened. It couldn't get through there. It didn't get through there until Friday. Now compare that one to, say, the Euro Yen, right? The Euro Yen belt actually was really close to a triple top up here where these other candles couldn't get through, right? And I guarantee you, if you looked at some indicator, which I don't have on my chart here, but if you slapped up an indicator on here, you're going to see divergence. In other words, you're going to see these candles making higher highs, or at least almost equal highs, and then the indicator is going to be tailing off. So let's just do that. Let's look at something. I don't know, the CCI. Okay. And there you go. You've got this peak right here that corresponds with this peak. And then you've got another peak here, which is almost equal. It's not quite, right? It's not quite equal, so it's really not divergence. But what I'm saying here is you have equal touches on the zone, and your indicator is just falling off the cliff. So as a naked trader, I can see that. I can see that, look, it looks like the market's going to fall off here. It's sort of rounding up here, and it's going to fall. Even before, I was talking about this even before we got the belt. But once the belt, it was like, okay, the nail's in the coffin. So there's two ways to look at it. You can look for the ones that stick out more and print higher. The pound yen is another example of that. Where is the pound yen? See how the pound yen was much higher and touched the zone with the other touches here. And you compare that to one that was sort of sloping down like the Aussie yen. The Aussie yen was sort of falling off. Let's take a look at that one. Where's the Aussie yen? The Aussie yen here is very different looking to the euro and the pound yen because it's actually got a lower belt. So whereas our touches up here are much higher than our belt, it's sort of rounding down here on the Aussie yen, and the belt was sort of sloping. But the belt also it's out here. It's away from the recent two candles here. That's good to see. I tend to kind of go for the ones that I kind of like the ones that are lower. In other words, I like to see the market start trading in my favor. In some ways, the ones that are up against, I really like the Euro Yen one. It was really pretty looking, how it was sort of equal highs here, or nearly equal highs. But the ones that are sloping in the direction already are nice to take for me because it seems like it's just a weaker currency pair. That's why I like it. Alvin says, if the belt candle is a long candle, the stop loss risk would be very high. How would you address to reduce the risk in pips? Well, Alvin, one thing you can do is you can use a different stop. So, for example, let's go back to that Aussie yen, and let's say that I'm willing to trade this belt if the market trades lower than my low. So my sell stop's down here, and my stop loss is up here. Okay, so that looks like it's about 70. Oh, wow, that's even more. It's 170. Yeah, about 170 pips. Now, what I could do is use a different stop. What I could do is say if the market goes 75% of the way to my stop, so if it gets up to here, 86.40, I dump it. I could also say if the market closes inside of the belt 2 days in a row, I'm out. So here's one day where it closed inside the belt's range. If this candle closed inside the belt's range, I could have dumped it also, long before it hits my stop, most likely. The other thing I could do is just shoot for really big reward to risk ratio. So my win ratio goes down, Alvin, but instead of targeting this zone right here, I just target this one. So that's another way. That's another way of doing it, is simply just deciding, you know what, I've got 170 pips of risk. I'm not going to go for only, 130 pips of reward. I'm going to go for the full 250 down here, 260. And that's how, or even 420. go all the way down here, and just let it ride. So what will happen then is I'll get stopped out more often, but the math of it works out better. The other thing is that some traders don't mind having bigger losses so long as their win rate is really high. So if you find that the belts work about 80 to 90% of the time for you in your back testing, and then you're going to go live with them, perhaps you decide yourself, say, okay, all right, there you go. I'm going to make money 8 out of 10 times. So maybe every time I risk $1, I make on average 65, 70 cents. But if I'm making 70 cents 8 times, right, that's $5.60. And then those 2 times that I lose a full $1. I'm still up $3.60, right? Something like that. Gamster says, if you, since there are a lot of belt trades, do you trade 1 to 2% on each, or do you divide your risk on all of them since they look the same? For me, Gamster, I actually think that they didn't look all the same. I actually kind of I didn't like the pound yen for whatever reason. I like the euro yen, the Swiss yen, and the Aussie yen. And I like the dollar yen too, actually. So let's see, the pound yen one, let's look at that one. I didn't really like it. I thought the pound was a lot stronger than the euro, so I decided to go with the euro yen. I don't know. I call it male intuition. That's what I did. So I went with that one. And you can see, so far, the pound sort of found support here on these highs. Alvin, hey, I think that sounds good. Alvin's saying, well, why don't we move the risk on the 1 hour time frame? Yeah, you can do that. But remember, what's gonna happen is you're gonna get stopped. The difference, what happens with these things is we'll get stopped out. Like if you're doing that, Alvin, if you're managing your risk off the 1 hour belt here, I don't know, do you get stopped out up here right at the beginning? Because the market went 13 pips higher than the high of the 1 hour belt. Or are you managing on the next day? So you're managing on the next day. Right. So you're in on this day right here, right? And you're managing, oh wait, hold on. Here's let's go ahead and do let's show our daily, I'm going to have to shut it down, guys, because we're just about out of time, but let's just look at this before we go. Okay, so I'm going to go to the 1 hour chart here, and I'm going to go to my belt, which is right here. It's this candle. So this from here to here is the belt. From this 1 hour to this 1 hour, that's the belt right there, okay? And then this is the next day. So if I'm waiting for the market to trade lower, notice that it did trade lower during the Asian session. I wait for the market to retrace and then finally push through. Okay, I don't like to see this immediate push early in the Asian session. So I actually gave it another day, right? Oh, this is the pound yen. I didn't trade the pound yen. But on the euro yen, it did the same thing. So I actually gave it another day, and it did push through there. So now if we're managing on the 1 hour chart, remember, we got these moves up to deal with along the way. Look at that one. That was a nasty one. So, yeah. Yeah, thanks, Leo, for spending time here. I really appreciate it. Yeah, so if you enter on the daily, Alvin, you can't manage on the 1 hour. I might go to the 4 hour. I think it'd be a little bit easier, but that's just me. Yeah. Thanks so much for spending your time here, folks. If you like the belt book, you can email me. It's walter@fxjake.com. I'll be happy to send you the book. And I would encourage you to test these out. Demo test them on Forex Tester. Do what you can to get your confidence up so that you see that they work for you. Or maybe they don't work for you. Maybe they're not your style. But I found that a lot of traders love them. I really love trading them. They have a really high win rate for me, and they're good fun. And it's really exciting when you have them because you usually have a whole bunch of them on the same day. So to answer your question, it's in the Naked Forex book about the correlation, about correlated risk. I do talk about that in the Naked Forex book. But the idea is that on correlated pairs like yen pairs, I reduce my risk, to answer your question there, Gamster. Thanks very much. Thanks, Todd. It's Walter at FXJake. Yeah, That's right, Keith. I'm excited to see some of you guys at the ITC in Barcelona. That'll be good fun. It's walter@fxjake.com. Thank you. Thanks, everybody. Have a wonderful trading week. We'll see you soon. Bye, guys.